Hey guys, good morning. It's Julie. We're going to take another look at the XREX template real quick. Had a question come up about it. Somebody's, thinking about using it for a combine account, something that can be controllable to mitigate risk. And this would be a perfect little template for that. Even if you think about, what you can achieve with this template and really do that one and done philosophy, these combines would like you to trade the same amount of risk and get the profit target each and every day. And so if you can set up a bot to do this on a high probability, schedule, um, trading with trend, I recommend do not use this template in a small range day. It will eat your profits up. You want to be able to wait for your moving averages to spread out and then for price to come back into the 200. That's where, once it starts spreading, and you get your price oscillator normalized, you can squinch your chart up. I like to trade the 144 because I want to wait for that mothership to get hit, and then when it's hit, to come back and trigger the 144 at that time when the oscillator normalizes at the same level. Do you see this flat? And it was at 18 points over here, 18. So when you flatten out, you can consider taking a trade, um, and then it's stabilized and it's a consistent distance between the open and your 144. So you can use that opposite distance as your risk. So there's your one and done. You're trading from your 144 back to the open and using that distance below the moving average. So couple of ways to set this up in Blackbird. To do that, I've got a Blackbird template that will allow you to trade this first touch and then trigger back in, or you can take second signals also with this template. You can get it at the 144, then you can get it at the 89, then you can get it at the 50, as you're coming back in, pick up those extra orders and monetize it even further. So instead of a one and done $360 trade, you could possibly, increase your contract size and then carry an extra contract from the 89 down and then maybe the 50 down for that portion of it. Just pile driving it down to your target and, make it even more lucrative. But the trick is then to turn the algo off and not let it chop you up, because it can go sideways and chop up and down in these ranges, especially if you have the wrong distance to set your bar size to begin with. So considerations for this template are: what bar size are you setting? I like, to consider something like a 15-minute, try to replicate that 15-minute range, and then wait for the trending condition to come. So however you look at your other trend filters, you can apply those in Blackbird separately from this, but just to get the template to work in Blackbird, to require that first touch of a higher moving average and then come down to get the lower strikes, is very easy to set up. You can put your bloodhound logic on top, all these first touches that you want to take, and then it will trigger on the subsequent lower EMAs. So I've got the template already set up for you, the way it will execute and allow reentry on same bar. And then for your money management, you can decide your net profit, net loss. So if you're going for that 50K combine, um, 15 days, 360, 15, $5,400. So that's like every day is a winner. So this would be an achievable, I think, goal. So you can decide your risk and trade in and out of that risk this way. Profit target going back to the prior open, and your stop loss beyond your EMA entry that you're trading by that number of ticks. And you get those levels right here. So that was 18 points or 72. When I change the oscillator to 89, we're going to get a different point level, 11. So we can go in and change this to 44, right? 11 times 4, right? 44, so you would just change that to 44. Or keep, I keep the other one. If you're going to the open, I would do it this way. And then do each leg lower separately in this manner. Or you can carry your risk to your 200 and go opposite your open by the equivalent distance from the 50 to the 200 or the 20 to the 200. So I'll show you what that looks like. So you can set the top one to 50 and the bottom one to 200. So if you wanted to know what the spread of that is, you can use the oscillator to show you that. So it looks like it's at 1750, 1775. Once that, yeah. So maybe, use this to set your risk. But I don't do the spreads like that. I'll just put it on one moving average that I'm interested in. And usually just do it like that. But so you can get your distances between the averages or offsetting from them from the average to the open, and then use the corresponding feature in Blackbird. And if you, I thought I had my market analyzer up, trade in the direction of your trend and then set your goal for your money management. Restrict your, trade schedule around the time period that you want. If you have PT indicator, you could also require the PT level to be at a lower, volatility threshold. So anything below 15-minute PT2, you would find as an acceptable volatility threshold to trade this template under. That can be done. Or locational based. If you just want to trade outside, your VWAP, second standard deviation, you can set it up to do that. So you can get creative with your filters. If you want to trade a 50-200 cross, require that condition to be in place before this. You're just trying to find that range expansion so that it's not going flat inside the ones of the 1 hour IB. You want to wait for it to break out of that range so that it gives you a chance to think that you can come in here for that directional trade with a higher probability. The goal is to pass your combine, right? So you want to try to make this as high probability as possible. Okay, so that is that. And then, of course, if you think about it, there's what, 20 trading days a month? So 20 times 360, 7,200 a month. That's 86,400 a year, just that one little trade, if done right. So think about it in that light. Also, you can have a little bot to pay for your vacations. All right. Y'all take care. Thank you.